Good morning. This is Connor from 0DTE Traders here to present our market minute for January 5th, 2024. It is 10:30 and the SPX is up 0.6% to 4716. Although if we measure from the pre-market low, trough to peak, the SPY has seen a 1.25% up move. This is in response to non-farm payrolls and further exacerbated by the ISM Services PMI, which was released at 10 o'clock. In this video, I want to go over non-farms and how we traded it here this morning. I'm not going to go into the numbers because, quite frankly, it's irrelevant for 0DTE traders. What we're most concerned about is the market reaction function. Now, the initial reaction was a sell-off into the SPY put wall of 465. You would assume that this is bearish and the market may continue lower. However, there's a common saying that the first move is often the wrong move. And that holds true for most high volatility events, non-farms, CPI, FOMC. But of course, sometimes the first move is the right move. So how do you filter it out? You need to watch implied volatility. And we simply look at VIX for a proxy. And we were highlighting this morning, if the SPX initial reaction is down, but the VIX doesn't spike, the dip's probably going to get bought. And, well, that's exactly what happened here. The SPX came down, consolidated, and the VIX did pop initially, right? The first minute, although it was quickly sold and started to come down. Now down about 8% from its pre-market high. So that gave us an indication, okay, we got to buy this dip. We're probably going to see a squeeze on the upside, just given the fact that vol is elevated and there's squeeze potential if volatility gets sold. And, well, that played out very well for us. We positioned via butterfly. We thought at least the market is going to backtest 4,700 with the upper bound of probably 470, which is essentially where we're trading right now. And, well, that has played out. So we went from a $45 butterfly to, a $200 butterfly in, well, a matter of an hour there with this strong up move. So a very low risk strategy on how to play a high vol event. Right, and the worst case scenario, if it goes against us, we're out $45 per contract. Best case scenario is we close at 47.10, and if we close at 47.10, it's $950 in profit per spread. So low risk, high reward. Of course, we never just want to, buy and hope for a pin. We definitely want to be booking profits into a move. But as of right now, the market is getting exhausted. We saw a pretty significant move on the upside. This was a squeeze. We kind of highlighted these dynamics in our market report here. Given the elevated volatility risk premium, given the fact that we're negative gamma, there was fuel for a sharp move higher. That has largely played out. So if there's going to be continued upside at this juncture, it's probably going to be more of a grind, and it's going to require participants, positioning long, whether that's long calls, longer dated 0DTE, or equity buying. At this juncture, we're finding resistance at our flip of 47.20 and the max call strike at 47.20, which tends to be a pretty good indication of upper and lower bounds. So in order to see more upside, we need to break that, and we really want to see call volume start to build overhead. But as of right now, we recommend, if you played the pre-market, book profits into this move. And I would be a little bit tactical on the downside here today. We're really watching the VIX, because if the VIX continues to stay sold, it's likely going to keep a bid under the market, limiting the downside. Although if vol resurges, you could see a sharp move down, although I don't really see any catalyst to spark that rebid in vol. Nonetheless, it could happen, and something we want to pay attention to. All right, everyone, that's all I have for you. If you're not a member and you're interested in learning more, you can visit our website at 0DTEtraders.com. Best of luck out there today.